My name is Kamal Warren, and I day trade the FTSE 100. But coupled with that, the other important tool that you can use are pivot points. Pivot points are this dotted lines here. Let me remove that and put that back again. Delete pivot. So if you go to your tools, and then you got pivot points, you add, close, and there you have the pivot points. So because you don't have Fibonacci numbers to see where it's going to reverse, etc., you can possibly use pivot points. As you can see, what's happened today is from opening it moved up to new highs, but it needs a turning point because it has already surpassed the previous resistance point and it's punched up. So where is your roadmap as to where you'd possibly take profits if you're long here? And you can quite clearly see it reversed at the resistance 1, which is one of the pivot points. It's moved down. It has hit the support and resistance of the previous level, the green line, and it's moved up. So anyone who's nimble enough, what you can do is you can, well, if you're brave enough, obviously, without using indicators, you can just go long here, have your first profit target even here at the green line at the resistance there, and if it punches through there, you can buy there, take profits there, and it reverses there and you take profits there and you go long again. But I don't do that. I just wait for chart pattern formations to break out. If I was trading today, I can see one chart pattern which would have ended up in a loss. So that's a whoops. Let's get rid of this line, it's confusing. Right, this is what I would call as a rising wedge. Not drawn this fantastically well. You need to look for at least 3 touch points, and if you have 3 touch points of top and the bottom line, then it is a valid chart pattern. So in this case, it's a rising wedge. As you can see, the chart pattern has formed from about 7:30 right up to the breaking point there. Well, it wouldn't have really ended up in disaster, contrary to my belief, but I would not have taken a huge amount of profit. So can you see this candle here is the break outside of the, so this is a chart pattern. This break outside the chart pattern, when you're trading off chart pattern, you're looking for a breakout. So this breakout, so I would have shorted the market there at about opening there is about 70. If you take the spread, you probably opened at 69 or 68, and I would have had my T1 target 1 at around about, I wouldn't have been brave enough to go all the way down to pivot. I probably would have had at the green line here, so around about the, to go by round numbers, maybe 565 level. So my first trade would have given me around about 10 pips, and my second trade would have been stopped out at break even. So that's looks like where are we now? Close to 3 o'clock. That's a trade I would have done for today. It depends if it forms any other chart pattern here. And also, can you see, going by a question on momentum indicator, if you look at the breakout point here, the momentum here is climbing and climbing and climbing right up to the chart pattern formation. At the break point, it just drops. So I mean, this is not, you don't just rely on momentum. Like I said, on the 5-minute chart, the momentum is, it's not a fantastically reliable tool. But when you're looking at just that brief second of weakness in the market, you can sort of use it as one of the tools for you to strengthen the belief that whether it's going to drop or otherwise.